All right, Bulls and Bears, how's everybody doing? I hope you are well. It is another late night report. I apologize. Usually I put my videos out a little bit earlier than this. This one's going to be put out today. It's August 23rd, 2024, by the way. Recording this about 7:30 p.m. Pacific time, which is really too late. If you're a creator or a influencer, I don't consider myself an influencer, but if you're someone that puts out content, it's probably not a good time to do it at 8 p.m. Pacific, which is like 11 p.m. Eastern time. And by the time I edit it, it might be 8:30, which is 11:30 Eastern time. Anyways, let's get into the news today. A lot of financial, economic news. It's pouring in here, folks. This is a lot to talk about. Big update in the markets. By the way, you might be watching this on August 24th because I'm putting this out late at night on Friday. So you probably, some of you, maybe most of you will be watching me on Saturday. Anyways, all indices in the green as the Fed jawbones the markets higher. And I think we might have been one of the only channels. I know a few other channels that said there's likely going to be rate cuts. But most people that I look at and follow had said the Fed would never cut rates. Well, it's starting to look like they're going to be cutting rates. And it would be perfect timing, wouldn't it? We've got all the indices today up. Dow Jones up 1.9%. Or 1.14, sorry. S&P 500, 1.15. NASDAQ about 1.5%. The big one, the Russell 2000, up over 3%, about 3.2%. We had oil jump up again a little bit here to $74.96 a barrel. Now, remember, we've been draining the petroleum strategic reserves for a while. We still aren't alarmingly low, but it's definitely lowest that we've been in years. Now, it actually bumped up here recently, but myself and many others are thinking that's a drop-off in demand as summer travel has now, for the most part, ended. The busiest days have ended. We'll see coming up here in September when we have Labor Day coming up. We'll see how the indebted Americans, the people buried under credit card debt, if they continue to go further into debt to travel. I think they will, as long as the banks permit it. Remember, this whole thing is propped up on debt spending, including loans, credit cards, and folks, the debt just continues to climb. Until that stops, you're not going to see a correction or a recession. Remember, in 2008, we saw credit get contracted very rapidly and very suddenly. And that's what really brought on the crash. Now, before that, things were really slowing down with the debt levels, the home prices. Today, everything's worse. The debt's higher. Home prices are higher. Unaffordability is worse. What's keeping all this from crashing like it did in 2008, even though everything's worse? It's the banks, folks. The banks still are loaning out money. They don't have to have any money, and they can still loan it out. That's what the reserve requirement is. So let's go ahead and get into it, folks. This whole thing's propped up by endless money ever since the early 70s. We came off the dollar standard, or the gold standard rather, for the dollar. And ever since then, it's been inflation nation, and not just the U.S., most of the world, if you look at the fiat currencies everywhere. There are some countries out there, the BRICS nations, re-implementing not only their own currencies into global trade and going outside of the dollar, but also commodities such as oil. And there's also been talks of precious metals being implemented. So we're going to keep an eye on that. We've got some big silver news actually to get into, because I think very, very soon we're going to see the shocking reality, and this is my opinion, the shocking reality of the real silver price. I think the manipulation's about ready to be uncovered very, very soon. I'm thinking any month now. If it happened tomorrow, it actually wouldn't surprise me, but I think we're coming very, very close. I'm not talking about 5 years, 4 years. I'm talking about within a year, in my opinion. But I think before that, we're going to see some really dark times. That, remember, they need to cover up this economic collapse, the debt levels that are unsustainable. They're already out there trying to help millions of people by forgiving debt. We've got Ms. Harris out there now with the down payment assistance program nationwide. And we already have down payment assistance programs in every state. But now they're talking about coming out with a national one of around $25,000, up to $25,000. So we'll have to see how that plays out. But you can see they're doing all they can do to keep this market, keep the economy and keep the markets looking strong. And now we've got talks of rate cuts here. So that's what it is. Here's one of the headlines, though. CNBC, here's how they put it. Dow Jones closes more than 450 points higher as Fed signals rate cuts are coming. Right? So something that I said was going to happen here, and I said it would probably be within a month or two of November, because November is a very big month this year, 2024. November is a huge month, actually. And I don't think anyone's actually surprised. And even if it doesn't happen, the fact that they're just talking about it. Remember, the Fed, they can jawbone the markets just by saying it. And just the rumor of it makes prices go up. Gas prices are now at levels not seen since 2021. So up until now, over the past few years, we did see a draining of the petroleum reserves. And we know a lot of that was optics to try to make it appear like everything's going to be fine. How to prepare for the Fed's forthcoming interest rate cuts. AP's talking about it, folks. Everybody's talking about it. It's almost baked in the cake. It's so baked in the cake now that if it doesn't happen, it might cause the opposite reaction where markets start to panic. All right, but really, I don't think they're going to allow that to happen before November. But keep your eye out, because something else is going to drop before November. Just think 2 words. Just think Red October. Let's move into real estate here for just a minute. Orange County here in California, between San Diego County and LA County, Orange County faces a population exodus. Its housing market couldn't care less. So even with the exodus, prices are not really crashing. You would think with a huge exodus, prices would be crashing. The area's famously temperate coastal weather, picturesque beaches, and Disneyland backdrop lend a sense of endless serenity to the place, at least from the outside, but increasingly dark formations of heavy raindrops of California's ongoing housing affordability crisis are becoming too big to avoid. This is how San Francisco Gate is putting it. Most people in Orange County seem to know somebody who's talked about moving away. So basically, it's a lot of talk that we've been hearing for years, the California exodus, everybody's moving out. But remember, there's just as many people coming in than leaving. And, I don't think we're going to see empty freeways here in California, even though we've been talking about this California exodus for years, because actually I think the population is still growing. Remember, you've got millions of people coming into this country. So there you go right there. I think that's the answer. And will home prices crash? No, because we still have an undersupply of homes and a population that's just surging too much, on top of all the other things they're doing to keep the housing market propped up. Again, the down payment assistance programs in all 50 states. Government now buying most of the mortgages, going through the non-bank lenders for that. Corporations buying, 1 in 6 homes now nationwide. So prices are going to have a very difficult time dropping, folks, if this keeps up here. But let's move on to some other things here. Wanted to get to this here. And this is the joke of the day, folks. The Economist, Powell, almost declares victory over inflation. So again, it goes back to this 2% average inflation target that we heard about for decades. 2% average inflation target. We haven't hit 2%, and we definitely haven't averaged inflation. Remember, to have a 2% average inflation after the last few years, we need several years of deflation to average it out to 2%. Folks, it's all a joke. It's all a scam. They never wanted a 2% inflation target. They can't allow inflation to go down, because that would be the end of the false economy that they want everybody to believe is doing awesome. Student loans, 1 in 3 borrowers have slowed repayment. So that didn't take very long, did it? Less than a year. We started back in October. We've got the uptick now in more students becoming late on their loans. Pretty soon it's going to have to be complete forgiveness. And it's not just me saying that. They're already talking about massive amounts of loan forgiveness, folks. Why? If everybody is doing good, if the economy's strong, again, we have to ask why. Take a look at this. This is really, I think, something that people need to consider. And look at how this is worded out of courts. Laid off GM workers say they were, quote, thrown into the curb like useless trash, unquote. Well, yeah, that's what companies do. If they don't need you, I'm not sure how these people were let go. Maybe they were actually kicked on the way out the door or thrown through the air. I don't think so. Folks, companies will drop you like trash if they don't need you. That's just the way it is. That's corporate America, not just corporate America. corporate global. That's the name of the game. It's all about profits. You think the companies are in business to give you a better life, to make you feel good, or to be nice to you? Sure, they'll be nice to you because they have to, because there's laws against harassment and hostile workplaces. But when you're no longer needed, folks, you're gone. That's the bottom line. Unless you're some upper level executive with all kinds of weight and the ability to vote your own self a raise. The automaker laid off 1,000 software and service workers earlier this week. So just looking outside of the, for lack of a better term, the mean layoffs being thrown to the curb like trash, the fact that we have to lay off, or that GM has to lay off this many workers, that should also be, I think, a red flag that looks like demand is dropping. Let's go into fast food. Let's dip into the fast food situation here. Subway cutting its price. We talked about how it used to be a $5 sub, and then it went up and it went up and it went up. And now I think I saw a coupon the other day, and this was on sale. 3 subs for $24. So we're at $8 a sub now, up from $5 just a few years ago. And that's with the coupon. I'd hate to see the price. It's got to be close to $10 per sub now without a coupon or without some sort of discount here. But that's being reported because we've got these fast food companies now, including Subway, dropping prices because a lot of them saw a big drop off in demand. Well, they're going to have to find ways to help people pay their credit card if they want the demand to really come back to where it was just a couple years ago. Let's go back into cost of housing here for a minute, and in this case, rents. Department of Justice, out of NPR, Department of Justice, DOJ, Department of Justice, accuses real estate software company of helping landlords collude to raise rents. Collude to raise rents. Well, if we didn't have mega corporations buying up tens of thousands of homes, and some of them actually own 100,000+ homes, if we didn't have all these huge companies buying this much real estate, then they wouldn't be able to collude. Think about it. If this was a society where only individuals can own homes instead of companies, then this could never happen. You couldn't get companies colluding because you'd never get that many people together at once to collude. But when you have 3 or 4 companies that together own collectively millions of homes, it only takes 1 or 2 companies to get together and raise the prices. And because of their huge market share, they can really have an effect on the overall cost of rents. So you can say it's, they're colluding and they've blamed the software company for doing it. So is it the software company's fault just because they created the software? Did the software company come out and say, hey, you have to use our software and you have to raise rents? I doubt they said that. It's just that the fact that these companies have too much leverage and they're able to make things like that happen with the price manipulation. All right, let's talk about sound currency here for a minute, specifically silver. I do think that silver is going to be re-implemented here in the very near future into the monetary system, starting with the BRICS nations, in my opinion. We'll have to see how this plays out. But right now, the dollar to silver ratio, folks, I hope you're sitting down for this. And if you have silver, I think you're going to be very, very happy to hear this. You might already know this. The year-over-year increase in the U.S. money supply divided by the yearly world production of silver. We're talking about mined silver. When you do that formula, when you do that calculation, it comes out to $5,039 an ounce, folks. $5,039 an ounce. So I think at some point here in the near future, we're going to see silver match what the gold price is right now, and maybe even below past it. Especially when you look at all the industrial uses. It's used in weaponry, it's used in solar panels, electronics, much more than gold. And I think when you see the gold reserves, when that's really discovered how much gold we really have, gold may even come down in value, right? In the short term, though, I think it's going to continue to go up because of the panic with de-dollarization and what the Fed's doing, keeping rates too low, keeping all these bubbles inflated. So it's going to continue to be a hedge against inflation. But ultimately, silver is going to be mind-blowing, in my opinion. And I continue to stack silver. So I hope you are. Not just silver, but whatever you think you need, because everybody's different. Everybody stacks different things because everybody, I shouldn't say everybody. I mean, I'm sure some people agree, but a lot of people have different definitions of what they need to survive when this whole thing comes down. And it could happen any day, folks. So keep stacking. Get ready for this. What do you think about the news today? Market's up big because of the Fed job owning. Where does it end? And what are we going to see bring this whole thing down in the next, I think, next couple months before the end of October. Please let me know what you think down in comments. Agree, disagree. What did I miss? Talk to everybody very soon. Keep stacking. Bye for now. Peace.